Howdy, it's Shannon from Alphatrends.net. Today is Saturday, the 23rd of December, 2017. Hope you enjoy the long weekend here. We had the market gain a little bit of ground in the S&P 500, the Nasdaq down slightly. The bigger winner was the Russell 2000, and oil bounced higher a little bit. But let's take a look at the action on the charts and make some sense of it all for next week. The S&P 500, we've had this trend line intact since the middle of November, and you can see that that trend line was broken. As I always like to point out, that breaking a trend line doesn't mean the trend is over. It means the rate of ascent has slowed and that we could likely expect at least some time correction here. The market has been holding up near all-time highs very impressively, and for this week, if we drill down to a 15-minute time frame, so you can see that our week began here on Monday with a gap higher, but the sellers took control, and this is the volume weighted average price for the week. We are, stuck below that, so there was net selling this week, but we are above what we were looking at as a key level of support. That's about 266.5. So as long as we remain above that, we still give the intermediate term benefit of the doubt to the buyers. If we do lose some ground early next week, I would think that there's a couple volume weighted average price levels, one off of this low. You can see that comes in just underneath that little band of support, and from this washout here, this is our volume weighted average price from that level. Now, if we were to break below those, then the volume weighted average price from this move, I think, would be the next potential level for this market to decline into. On the daily chart, let's just clean all that up. You can see we're still holding above a rising 10-day moving average, so it's still very strong trend. I would also be looking at the 20-day moving average near 265. So the fact is we remain in a long-term uptrend, and to see a little bit of a pullback or time consolidation wouldn't come as a surprise at all. As always, we focus on the individual names, and there continues to be incredible opportunities in this market that we find day in and day out. For the Nasdaq, for the week, we saw that the market gapped higher as well and maintained below that week-to-date volume-weighted average price almost the entire week. We have a little bit of a trend line break in here, but we have this horizontal support as well as the volume-weighted average price from this level coming in at about 156.50-ish. So this Nasdaq, we've got to look at it, is still in a strong uptrend. We are here also above a rising 10-day moving average. We have prior resistance in here likely to become support. So all in all, the Nasdaq remains quite healthy. The Russell 2000 is healthy. It's looking like it's consolidating and getting ready for a push to new all-time highs. We have on this daily chart, you can see this horizontal support that had been prior resistance so far is holding as support. We're above a rising 10, 20, and 50-day moving average, all indicative of a bull market. The volume weighted average price off of this low we're holding as well. So when we look down to a 130-minute time frame, which gives us 3 candles per day on 130 minutes because the market's open 390 minutes per day. You can see that the volume weighted average price off of this recent low and this recent high kind of come to form this band of support in here as well. So let's drill down to a 30-minute time frame, and I think that what it would take to get this market really buyers back in control, one, we give it the benefit of the doubt as long as we remain above 152, and that the volume weighted average price for this week, we're below that, so it's most likely going to have to get above and hold above this 154 high for more than a half hour. If it does that, then I think that you could expect that this market will move on to all-time highs. I think a likely scenario would be something like this: pull back and then kind of do something like this and then get going to new all-time highs. Semiconductors, I've been telling subscribers at Alphatrends that they're best left alone. They're trapped underneath this 50-day moving average. They've been trapped under that 50-day moving average now for the longest time that they have been, since back in 2016. So I think that this long uptrend is in need of further consolidation. It wouldn't surprise me to see some further pullback in here, perhaps test a recent low and that 20-week or 100-day moving average down in this 95.5 level. So I'd say just be a little bit defensive when it comes to the semiconductors. The biotechs really have been a waste of time here. They've still got that declining 50-day moving average, so I wouldn't expect, if it breaks beyond this level for it to turn into very much. Twitter is one that I've been talking about a lot because since earnings, it's been really giving us some great entries and in some great trades. That is the for Alphatrends, we purchased the stock right over in here, and then got out of it over in here, and then we purchased it back in this area as it got back above that rising 5-day moving average, and more importantly, the volume weighted average price since earnings, and then this peak. This is where they really took control, and this is where we had purchased as it was getting above these volume weighted average price off of this low and this peak. The buyers regained control, and here we're still long a third of our original position from back here. We have our stop 24.35, and as I pointed out on Twitter this week, that we're in an important level. Let's take a look at the weekly chart, and what we had. The reason I had become bullish off that last earnings report was because we are also getting above the volume weighted average price from this big decline in 2015. This week I pointed out that we have the volume weighted average price from the peak in the third quarter of 2014, and that was likely to provide some supply that would slow the stock down. Another reason I thought it would slow down in there was because it was breaking out. And when people look at a stock that's breaking out beyond a high like this, you have what they often don't consider is where had the stock come from. So when we look at that daily time frame and we look at that breakout right in there at $25 and let's just call it 25 cents. So as it got to that 25, I said here's a likely area for supply to come in, because what you have to always consider is your risk reward. Do you want to be the guy that buys up here on this so-called breakout after the stock has just made this type of move, a move of 4 points or 20%? It had just run 20% and then breaks out. No, that's the type of breakout that you typically sell into. Now the stock is in pullback mode. So the people who chased and bought up in here and got excited because it was making a multi-year high, I don't think you have to panic and throw your stock away, but you're dealing in the stock from a position of weakness versus breaking from a fresh position. This is dealing from the position of strength. Now, I think that what's most likely to occur in shares of Twitter is that you'll see some further profit taking, that you'll see it kind of do something like this in the next week and a half, and then, perhaps probably, start to flatten out again. And then what we would see happen would be let's just back that up a little bit further. At the same time, you would see this 5-day moving average kind of start to peak out, come down, and then the 5-day moving average looks like this. What we would then be looking for is another opportunity to buy this stock. If it were to do something like this, we would want to purchase over here at the beginning of a new move, because if it did that, then we could put our stop underneath this low right in here, versus the people who buy chase a breakout up here. Where do you put your stop? Do you put it under here? Do you put it way under here at $20 a share? To me, that doesn't make sense. It's about risk reward. Hope everybody enjoys their long weekend, and Merry Christmas. I will talk to you again next week.